go ahead and give you the answer now. And don't worry, I'm sure we'll get the question still anyway. I'll answer it again when it comes through. Today we have Andy Abraham. If you're not familiar with Andy, he's written The Bible of Trend Trading and another book whose name I've got written down but escapes me. The Bible of Compound Interest, I believe is the name of it. Compounding Money. I was close. So in any case, Andy's, how many webinars have you done with us?
Well, let me say it like this. I've been using Metastock since 1994, so I'm basically aging myself. So I'm not sure about the webinars, but I can tell you I've been an avid user since 1994 and strongly support the product.
I know that I've hosted several classes that Andy's done, and he always does a really, really good job, so you guys picked a really good class to come to this morning. I'm going to go ahead and, Andy, I'm going to turn the time over to you. Let me go ahead and make you the presenter. I should pop up with a little bit of a dialogue that says, do I want to show my screen? Go ahead and click on yes. I'll let you know when I can see it, and I can see it. So.
Fantastic. Okay, greatly appreciate it. Let me first start. I've been trend following since 1994, and for all of you that think this is easy, it's definitely not. It's always challenging, and I like to use the word that it's a marathon. I also like to state that I like keeping things very simple, and this is exactly what we're going to discuss in this webinar. And the good part is I'm going to give you some free stuff to help you become a better trader. And my rationale for that is very simple. I trade for a living, and I had people help me. And if I can help you, that's really much my goal. And I want to share with you ideas, and the ideas that I'm going to share with you, there's no magic to any of them. Every trade is 50-50 at that, and probably with trend following, your odds are even a little bit worse than that, believe it or not. But you make your money by riding your winners or trades that work and cutting your losses short. So as we're getting into the program more, I'll give you all my little giveaways. One of them was also Jeff mentioned about the Bible of Compounding Money, because that's really what this is all about, is trying to stay in the game and compound money over long periods of time. Let me first give you my disclosure, which is down on the bottom, which, again, because I'm going to be showing you charts, that past performance is not indicative of future performance, that clearly there's always the risk of loss, and I'm going to really accentuate that, and really probably not what you want to hear, tell you how hard this really is, because that's really the truth of the matter. It's not easy. Jeff stipulated that I wrote some books. I wrote the Bible, the Trend Following Bible, which you can buy on Amazon. There's another book called this one, let me just see it, Compounding, which I self-published. Let me see if this comes up. Oh, that's great. Here, this book, The Bible of Compounding Money. All you can do, if you'd like, is email me, and I'll give you my email at the end of this discussion, and I'll send you this book for free. It'll be a PDF, and hopefully it'll help you. Let's start. Okay, I start my mornings off, first thing, let me make this a little bit smaller, or maybe I'll move it over here. Okay, first thing in the morning, I'm up at 5 o'clock in the morning because I'm overseas. I get my data first thing in the morning. It's basically 3 o'clock in the morning. By 5 o'clock in the morning, I'm working. I trade stocks and I trade commodities. So in the essence of this, because I am registered with the NFA as a commodity trading advisor, I don't really want to discuss anything with commodities, and that's really not the essence. What I'm going to be discussing is stocks and how to approach from a contrarian standpoint, because trend following is based on two premises. You have trend breakouts, which are very simple, buying the highest high of the X period day, let's say, or vice versa, selling the lowest low of the X period day. Or you also have retracement trades. That's what trend following is. It doesn't get any harder or more complicated than that. The problem is us, our fear, our greed. You'll have let's say a series of trades that don't work, and I'll underline the word don't work. Not that you lost money, because guess what? In reality, you're going to have so many trades that don't work, and you have to come to terms with that. And this is not, when I teach, because I do private one-on-one mentoring, so many people are looking for this holy grail, and I'm talking to very, very smart people, doctors, lawyers, engineers, and they're so busy trying to find out this magical indicator. They don't exist. Only simple concepts, which I'm going to elaborate today and show you and give you, can potentially stand up over time. That's it. And then you really need to accept the reality or the idea that many trades aren't going to work out. So that's pretty much the background. Does anyone have any questions or anything? If you have any questions before we start, you can put it into the chat box. Okay, no questions at this point. At least it doesn't look that way. What I always do is I try to look at the NASDAQ, and you can see if you want to, depending on how far you want to go back. Let's go back a little bit further. We haven't gone anywhere really. We've been in this trading range from a high here to a low here. It's been very difficult. A lot of stocks that break out, they don't continue to break out. And the rationale is why. We are 7 years plus into one of the longest bull markets ever. And as I stipulated, that I've been trend following since 1994. The good news and the bad news is like this. The biggest money is made coming out of bear markets. The hardest periods are like this. You see this. This is very choppy and very difficult. And you know what else is very interesting is you can also see from the basic Edwards and McGee lower highs and all of this, you know, the proverbial technical analysis. We're not really moving up unless we take out these highs, which is trend following again. We're in a choppy consolidation. And what's also I want to share, which is pretty cool, that I shared with some of my students, if we look at a long-term chart, since 2015 from the MACD, we're kind of turning down. And then you want to see almost these moving averages cross, and then you can say, you know what, the party's over, this bull market is ending. And you can also see how the bull market began, right here. So always try to look at the longer perspective. So where we are as many high quality, let's say technically fundamentally strong and technically breakout stocks have not been working because of this chop. It could be Facebook, it could be, you name it. There's so many, and there are some that do work. But to find the ones that are working is very frustrating. So what I first do is I look at the NASDAQ, I look at the S&P and say where we are. I have an indicator. Let me move this over. It's called the Andrew Abraham Buy. Really, really simple. And I talk about this in every lecture. And it's based on several premises. If we're above a 200 period exponential moving average, world's beautiful. The other thing that I try to do, I have to move this over again, excuse me. I want to see, and we can go back during a strong period, like here. And you can see my screen, and I can send you this indicator as well. We're bullish. And there's no magic to these indicators. I look at a 10 period exponential, and I look at a 30. You can use whatever fits your own personality. And they're above a 200. When you're there, you want to buy the strongest stocks in the strongest sectors. And I'll tell you this, I have been a subscriber of Investor Business Daily for years on end, and they help you identify the strongest stocks. And then usually what I do is I look for patterns, and I'm buying those, and the world is beautiful, and you basically trend follow and be able to compound money. But the essence of this lecture is we're in this chop. We're in this mud. And as I showed you before, the long-term MACD on a monthly basis really isn't overly favorable. So how do you trade this environment? So the way I've been actually doing this, let me first close this. Let me close this out. 1 second. Close all. Is I'm a contrarian. And I'm going to ask you to do a raise of hands. And you can kind of see my screen here. How many people have read or followed anything about anything that's in the news, let's say, of crude oil, natural gas stocks, or Brazil? Can anyone put their hands up or any messages? I don't know if it works with how that works here. 1 second. I'm looking for questions. If it works, 1 second. If I do this, expand. Nope. Okay. So, there was a question. 1 second. Let me just see. Yes, no. Oh, I have a couple. Hi, yes. Yes, yes. Sounds good. Loud and clear. Is Metastock better than AmiBroker? Well, I'll tell you this. I've used Metastock since 1994, so that's a vote of my confidence. There's a lot of years there. I don't think there's any better program. Really, what's going to make you a better trader is you, and it's not because of your indicators or the platform. It's going to be the way you think and the psychology of the way you approach trading and how you approach losses. Here, what do you think about reversion to the mean? Oh, perfect. I'm going to talk about that. I like this, Gray. Thank you. I appreciate it. Okay, so let me go to this. If anyone opens up a newspaper anywhere in the world, has anyone seen anything about natural gas or crude oil? Probably the answer is, I don't even have to ask you, I'm going to tell you, is yes. And Brazil. The Brazil stock market has been clobbered, destroyed. So let's take a look at it. What I did was I downloaded a bunch of ADRs from Brazil, and let's do like the main ones, which is Petrobras, and then there's Vale. Let's open them. Hang on 1 second. Open. And let's do, now this is, for lack of a better word, very, very, very ugly. You had a stock that was at 35, and today you're at $4.78. How many people would say that's pretty ugly? You can type in these questions or chat, and hopefully I'll see it this time. Okay. The point is, it's very, very ugly. And this is a trend. But you know what? There comes to a point of exhaustion. Like in a bear market, things end. These are major companies. Yes, they can go out of business. Yes, they can. We're not trying to be a bottom fisher, let's say. Let's make this one also. You can see this massive, from $80 a share plus, or 73, down here. Look what happens. There's a lot of money to be made here. And then if we took in our scenario that we're talking about now, there's also a lot of money to be made, potentially. And there's no magic to this, because you're going to see trades that don't work. So what I do, I have a simple indicator. Let me move this over, where I look for scenarios that are just completely beaten up, just pummeled, and very, very simple. And again, there's nothing rocket science here. You can see this indicator here. Let me open it up so you can see it. 1 second. Let me see if it opens. Expert properties. You can see them here. And I'll send this to you because my goal is to help you become a better trader. But you can see it's like eye candy. I'm bearish. I'm bullish. Okay? I have very simple rules for things that are like so out of favor and so beaten up. If it's Petrobras, if it's Unisys, if it's Marathon Oil, if it's, you name it. And we're going to go through some of these. And you have to understand the risk, because if you put on a trade it does not have to work. What we do, or what I do pretty simply, is I say, okay, I read the news. I like being, to some degree, depending on the market itself, a contrarian, because I've been beaten up, which I'll tell you humbly, with a lot of my can slim investor business daily stocks that are breaking out just keep on failing. And I know why they're failing, because we're in a choppy period. I also know that we're in 7 years plus of a bull market. Bull markets don't last this long. And maybe it's all due to the quantitative easing and everything else. But so I'm looking for scenarios that are not falling knives, because I want to see that they're redeemed and that I can put on a trade. And I'm also monitoring my risk, and I'm also monitoring my correlation. You don't want to just put whatever X% of your account size, because there's no magic number. It's whatever fits your own personality. You have to look at risk per trade, risk per sector, and total risk in the market, because there are always risks. Trades do not have to work, and in many cases, in most cases, they don't work. So as an example, let's say like this Petrobras. What I look for is I want to see that they're taking out moving averages. There's no magic number. You can use 100. You can use a 50. Okay? It's pick your poison. There is no magic number. And what you think, and you need to go back to Metastock and test and say, what would have happened X, Y, Z? Okay? I look, I want to keep it simple. It could be a 50-period moving exponential moving average. I want to see them above it. I like seeing that these are green. You see how these are green? Then, what is trend following? You're buying the highest high over X period. Guess what? Again, there's no magic number. Is it the 50-day high? Is it the 20-day high? Is it the 70-day high? Because I'll tell you this, if you go with a lower number, you can get whipped around. That's on one side. But on the other side, you get in early. This is what trading is. There's no magic here. That there's always caveats. There's always going to be trade-offs. But what I'm going to say to you, the essence of this discussion on being a contrarian trend follower, I'm going to talk about two separate ideas, which is the basis and the core of trend following: breakouts and trend retracements. So you can see this one, okay? You're green, you broke out. Again, you pick the number. For me, mine is a 70-day high. And I have the indicator here. Here it is. You can see it. Very simple formula. Highest value of the highs of the last 70 days. You want to change it, make it 50. Make it 30. Make it whatever. Because you know what? What is going to be for me doesn't mean it's going to be for you. And I'm going to tell you how tough this is. So this stock, let's just go in again. This was an $80 stock. You can argue the point back in late 2015 that the stock went down to $4. $4 and change, 5 and change. It took out the moving average, okay, which I decided it can be higher or lower depending on you. And this is what I do. I trade for a living, but also I help traders not just formulate their trading plan, but help them with the most important issue, the psychology of trading. And this is really the crux: accepting the losses, putting the trades on after a series of trades that don't work. Because this is not easy, because I'm going to show you exactly what happened here. You put the trade on here. You can see the highest high here on 410. We can make this a little bit bigger. It's right here. Bingo. So you would have bought this thing possibly, like a breakout of this high. This is standard trend following. And then you know what? You start seeing some weakness here. You get back down to the 50. What do you do? Depending on your rules, and everything has to have rules. Again, it doesn't have to be a 50. It could be a higher moving average. All this is a simple moving average. And this is what I want to relate to you. Simple works. If you close above below the 50, you can say, you know what? Thank you, I'm out. And then you know what? You could have also, to show you how hard trading really is, you turned green again here. And you bounced off the 50. You could even have bought here. And then it didn't work. This is what trend following is. But then look at this trade, the recent one here. Here's another one. You just have to be able to put them on. And you know what? There's people that'll say, you know what? I'm up X percent. You bought this thing in the $5 range. There was an $80 stock. Millions and millions of dollars of equity is in Petrobras. You might say to yourself, you know what? I'm going to scale out a little bit. I can take 50% of my profit here because you know what? Going from 5 and change up to 8 almost, that's a really big profit. Very healthy profit. But as you can see again, we closed below the 50. So this is really the dilemma of trading. And there always is going to be a dilemma. Okay, so here, this is Petrobras. Let's do Vail. You can argue the same, not even argue, you can say the same idea. Okay? Highest high, and guess what? The trade didn't work. But then you had the trade here. Let me make it a little bit bigger. Very simple stuff. And this is my trading chart, that I'm actually trading these things. You buy the breakout here, 3, you go to 6. Let me ask you a question. How many people would be very happy buying something at 3 and goes to 6 in this short period of time? It's pretty amazing. When stocks are beaten up, this is the potential. And then what you have to ask yourself is, do you scale out? Do you have a certain amount? Because everybody's going to have their own separate trading plan. That's what this is all about. And then you know what? Look what's happening here. You could have exited here. We're red, unhealthy. Turning green, but we haven't had the highest high again, which is the basis of trend following. I want to show you another indicator that's not mine. It's Alexander Elder. And it's a way to scale up and increase your positions. Because again, I'm going to reiterate this. And again, if you have any questions, you can feel free to email me. Let me just give you my email. 1 second. It's here somewhere. 1 second. Andrew@trendfollowingmentor.com. Okay? Because this stuff is not easy. Again, we can have a breakout trade, the highest high of X period. Great. You can see here that you went from 474 down to 345. That's a big drop. And you can see this indicator here, which is called the force index, is when you're in an uptrend and you have a retracement, because someone did ask about a retracement trade, which is here. You can buy the breakout here, or you could have bought the breakout here and add it to your position. Because when trades do work, this is what you want to do. You want them, you want to be able to scale into them. And again, depending on your own personal trading plan, not my trading plan, because the trading plan has to match your personality in order for you to follow it. So what I'm saying to you is like this. I look for stuff that is beaten up, hated, destroyed, and I look at a way to get in. Let's do like this. Let's look at some more. Okay? So, Brazil, you can look at, it's all over the news. They're in a worse situation like Mexico was back in the 1980s when Carlos Slim became a billionaire. And yes, he became a billionaire from Telmex. He bought on the cheap. He was a contrarian. This is what I'm telling you. You can make a plan to go in and to hold long term. You can pick whatever moving average to hold it. But understand there's trade-offs. But you're looking for things that are completely beaten up. What else do I have that's on my list of beaten up? Okay, Marathon Oil. And as a disclaimer, I'm in Marathon Oil. Okay? Marathon Oil, hopefully it'll open. Whoops. Is that pretty ugly for everybody? Let's say it was 41, let's say, 40.84. Got down to 652. So I've been in this trade a couple of times. And you can see the first one. Breakout, simple rules. Let's just make sure this is correct. 50-period exponential moving average. The highest high over my particular is the 70-day. Okay. I start getting a little nervous here. I sold, I took a little bit of a loss, but then I scaled up here and I took a trade. And I added to it here. This trade has been working a little bit. We'll see. Who knows? There's always these kind of trades. And you can scale out. Like at one point, I did scale out. I took some of my profits. I have to look at my trading sheet to tell you exactly what I did, but you got the idea. I'm buying a breakout trade here. Here's a retracement trade. You can see it where you have, let me make it a little bit bigger, where you're in an uptrend and then you start turning negative. And you start turning negative here. This is a perfect trade, actually, that I took. And it was a small risk. I knew that if it took out the low here of $12.11, this breakout here, the trade didn't work anymore. Someone asked to see how they want to see my email again. So here's my email. Let me just take a second here. I'll leave it up there for a minute. Okay. What I'm trying to say to you is there's an environment for everything. When we're coming out of a bear market, and how do you know you're coming out of a bear market? You're using very simple moving averages. You want to be up above a 200-day moving average. That's the bottom line for me. And then you can pick it. I use a 10 and a 30. I want to see a 10 and a 30 above a 200, and then I want to buy the strongest stocks. Right now, I'm looking to try to be somewhat, I guess with Brecht's exit and interest rates on the horizon in 7 years in this bull market, I want to try to be more. I'm looking for things that are beaten up, and yes, $4 can go to $2, and I'm not a bottom fisher. I'm looking for big capitalization companies, and again, turnaround stories. Under Armour was one of those, which we can talk about, that I traded, but I'm looking for situations where I feel my risk is somewhat mitigated, but I'm also delineating my risks constantly. Like here, the breakout again. If I go below this, I'm out. I exited, and I said, you know what? This could be a fake out. And that's how hard trading is. Bought the breakout. So we've been buying at the high of here of 11, it was like 12.06, and you went to 14 and change. There's nothing wrong about taking that profit. Half of it, going to break even, let's say. Here's another example. So this is what basic trend following is. Breakout trades and retracement trades. Just make sure everybody's with me. Let's go to another example. And I'm not recommending any of these things. These are things that I'm actually trading with our own money and real time, and also being extremely cautious, especially with the Brecht exit, what's happening. I'm looking at natural gas. Why natural gas? Let me jump to here. 1 second. Let's do natural gas. And I'm not recommending anything here. But what I am saying is, if you look at this chart, pretty much the same story. From 30 to 20, that's not a big enough hit. But you know what? 30 down to 2, that's a pretty big hit. And again, there's no guarantee that these trades are going to work or anything else. But I'm looking at natural gas companies and pipeline companies that are beaten up to hell. What are some of them? You can just type on Google, and you're going to find some of these biggies. You're going to find Noble Energy. You're going to find Chesapeake. Let's do Chesapeake. Noble. I'm in this one, Pemimba, because they also have a very nice dividend. Let me move this over. And this is, as we say, this is a nice trend. Beautiful trend. This is ugly, and you should have gotten out with the moving averages exiting it. This is just pathetic, going from 50 down to 17, and maybe 17 it can go to 9. We don't know. But what I do know is I'm saying to myself, I'm willing to take a shot here. I don't know why this isn't working here. Let me move it up a little bit. Okay, well, okay. And guess what? This is the breakout trade. We're over a simple moving average. Actually, it's 40. I don't know why I did that. It should be 50. But again, you can use whatever you want to use. Okay? Here's the day. Breakout. It's the highest high of the last 70 days. I'm above the moving averages. Great. I'm willing to take that trade. The question comes to is, where do you delineate your stop, where the trade doesn't work, and it does something like this, let's say, it turns ugly. You can cross the moving average. You can say if it falls 7% from my entry or 10% from my entry, I'm out. And you need to know this. My rule again is I like to say that, you know what? Let's do the highest high of the breakout, something completely beaten up. It throws off a nice dividend. Say to yourself, let's see what happens. So you buy it. And you know what? So far it's working. And you know what else also? Let me show you here. You were able to add to it. And here's a point. We talk about retracement trades. Where we're in an uptrend. I'm still above the 50. And the trend is neutral. You can see here. I buy the breakout of this retracement here. And I'm not putting on a full position. Oh, someone says PB doesn't have any dividends. I think there's another one. The Canadian does have a dividend. We can check it. I'm almost positive it does. Anyway, you buy the breakout again. But you don't put on your full account. Let's say I'm risking, again, it has to go down to its risk per trade, risk per sector, and your total portfolio risk. So, again, let's say I'm already in this and I've allocated, again, let's say I might have 5 positions and I'll be top heavy into, let's say, my positions. And that's how I like going into my stocks. Because if they work, I look to add to them to keep on working. When we go through trends that are in uptrends at the beginning of bull markets, that's where you really make your money, where you make the money in your strongest stocks, in the strongest sectors, with something new, something unique. This is the typical Can Slim idea, where going back in 2009, you had Chipolita, you had Netflix, which were amazing. You had Priceline, which was just, you step back and you just go, I can't believe this stuff. And now they're pretty tough, pretty tough. So when I'm adding to my positions, I'm only adding 10% of my original position on every, let's say, situation. What are the situations? One is a pullback to the 50-period exponential moving average and turning back up. It could be a breakout to new highs again of the last X period, which you can see here again. So I'm trying to scale in like 10%, 10%, 10%, like as if they're add-on buys. So I don't get top heavy. And then to me, the party's over if I take out this 50-period exponential moving average. Game over. So what are we doing with trend following? We're riding a trend here. And you can see you would have entered in the, let's say about here-ish, 24, and you're still in this thing. It's a nice trade. And the other thing you can consider is going to break even. Let me just jump over to see the questions if there's anything I missed. Please show Japanese. Okay. What do I like about Metastock? I like keeping things so simple. It doesn't get more simple than this. I'm using moving averages. I'm using highest highs. That's it. And I'm using this eye candy to keep me on the right side of the market. I mean, yes, you might use Japanese candlesticks and decide what this actual bar look like, and it means it's a doji or a this or that. I like keeping things so simple, where I like using cup and handle breakouts. I like looking retracements back to the 50 period exponential moving average. I like buying the 3-week high. Because if you can keep things simple, you can keep on doing them. That's kind of the beauty of Metastock, or at least that's what I believe is the simpler, the better. So let me just, I want to add like what I started saying about in the beginning of bull markets, because that's also super important. Let's go, let me move this over. Or you know what, I had one more trade that I was in, and I got taken out of, actually. Gold, GDX. The mini miners. No, it's down here actually. And it accentuated the exact same story that I'm talking about. Oops, let me try to move this over. I don't know what that's doing there. Let me get rid of that. Okay. Same simple stuff. Gold, this thing, let's go back. 70 down to 12. And the other interesting thing is you can do very simple technical analysis by drawing trend lines and staying with the trend. Draw a trend line, took out the lowest low. This was a bear trap. So I had a heads up here when I started seeing that it took out a trend line here. Simple rules. I should be above the 50 here. If that's a 50, you can see it. I had the highest high. I put the trade on. Wow, look at that trade. Not saying I'm smart, because the thing is most of these trades don't work. That's going to be the first point. But this is an amazing trade. And then you can add on to them during retracements. You can see a retracement here. You can see how it turned yellow. That's the beauty of Metastock. And again, email me. I'll send you this. I don't know what the heck it's called. Not an exploration, but it's very visual candy. Just draw a trend line again. You bought above it, you add to your position 10%, if that's your methodology. You have another pullback, then you had a big pullback here. And then you could say to yourself, if I take out this low of 21.84, guess what? The party's over. And we bounced again from 21.84 up to 27. That's a pretty fantastic move. And here's your stop. 50 period exponential moving average. Not rocket science. That's why, like when you go through Metastock and you have all these indicators, I mean, zillions, and let's say Japanese candlesticks, and you don't need it. You really don't need it. You just have to like listen to what the market's doing, be able to accept losses and trades that don't work, and you're going to have so many of these. But it doesn't matter. You know you're going to have small losses, and then when the trades do work, you get to run with it. Let's do this one. Let me close this one. I'll give you another example. Going back to natural gas. One second. I think that's a symbol. Yep. Look at this chart. No, is that the right one? One second, I did the wrong one. No, that's the inverse. One second, I forgot the symbol. There's a symbol for 3 times the natural gas. But you know what? Let's use this as another example. As a trend. Let's throw this in here. Shoot, let me move it back down here. One second. Bear with me. You can see the power of this indicator. And you can also see how many of them don't work. And when they do work, it becomes phenomenal. Where you went from 30 down to 8. And then when it did work, mind-boggling. And now it's not, because this is the inverse of natural gas. So, 1 second, someone else had a question here. What is the version of Metastock, let's see, 1 second, my help about Metastock, there. But it doesn't matter. Again, I was using Metastock when it had these diskettes that you had to install. All the stuff that I'm trying to teach you is so simple. The hard part is us. Let's go to, I want to show this because we're running a little bit low on time. If we go into, let's do this one. Let's do, because we're talking trend following again. And I started to mention it. Let's go back to this ugly, ugly bear market that most people want to forget. Make it a little tighter. You had a stock that went from 155 down to 35. Okay, we went through a really ugly, ugly, ugly period. But you know what? You go to Chipolita, they were lines out the door. And using these simple indicators, it'll keep you on the right side of the market. You can go and you can look at all kinds of things. You can look at their profitability. You can also look at what the NASDAQ was doing in March of 2009. It was taking it out and it was turning upwards. Because there's points here that you had, and I was in, you can see I was in this, and it was breakout trades. This is amazing moves. And it would be, it's the basic cup and handle. Here's your cup, handle, you buy the breakout, right here, the highest high, over the X period. Here, just throw this indicator on here. Not rocket science. Bingo. And you're above the moving averages. And you have a reason. And you had one here. And then you would have exited here. This is what trend following is. When they work, you want to ride them and add to them. Let's look at this. Look at this one. Let's go a little bit more. Because this is what can change your life. Here's another cup and breakout right here. 159 up to 260. Is that so terrible? And then if it took out the 50, that's it. And you don't have to watch this all the time. You watch, what I do is, I'm up at 5 because I'm overseas. I do my work, I'm done. I go to the beach, I walk on the beach, I go work out. I worked out at like 6:30 this morning till 8 o'clock this morning. Came back, did all kinds of other work. You have a life. But it's not easy. So I don't want to, delude you into this. So, are there any questions? Because now I want to talk about the free stuff I'm willing to give you guys. Any questions? No. Okay. Going back to what I said before, I have a book called, let's try to get to it, The Bible of Compounding Money. First of all, I appreciate the fact that you came and listened to this webinar. I'll send you this book. Actually, it's on Amazon. Let me find it on Amazon. We already showed it earlier on Amazon. Hang on. Whoops, let's move this over. I will send you this book for free. What I want to say also is that Mark Faber wrote the foreword of my book. It'll help you to learn to think how to compound money. I'm living where I'm living. I'm doing what I'm doing because of the years of trading. And I'll tell you this, and I'll be very humble. The last several years have been rather tough, like I showed you. But that doesn't negate when there are other years that are fantastic, and we live under our means. This is what we do as trend followers. But I'm willing to give you this book to give you an insight of what it takes. Going back to these indicators, email me. Let me give you my email again. Here's my email. Whoops. Right here. I'll send you the indicators. My goal is to help you become a better trader. Like I said, I had people that taught me, and they didn't teach me anything magical. There's no rocket sciences to any of this. All it really is finding a methodology that matches your personality, understanding the risks, and having all your risk management in place, going through the toughest times, and then getting back up, dusting yourself off, and doing it over again, and doing it again, and doing it again. Unfortunately, most people jump out and go to different systems or different methodology. They say, oh, this doesn't work, this doesn't work. Well, every system isn't going to work all the time. There's always going to be challenges. There's always going to be tough periods. And what I do is I have one-on-one mentoring. I do it by the hour. I charge $200 an hour. And I try to help you become a better trader. And if you buy my course, which is it's kind of a joke price, I make it $99, I'll sit with you for an hour. We do it over Skype, and I try to understand what you've been doing, what's worked, what hasn't worked for you, to try to help you become a better investor, because that's really the goal, and that's why you're probably listening to this webinar, because I would assume, and I was there, it's very frustrating, and you're putting your hard-earned money on the line, and then you know what? Trades don't work, and you lose money. Well, that's the nature of this business. In order to make money, you have to be able to lose money. So what I try to do is help you develop a plan based on everything that I've done over the years, and then even more importantly, help you stick to it. But what I do is it's all based on you. You determine the pace we go to. I mean, if you want talk once a week, once a month, once a year, whatever, I have those. I have to do on-site visits. So that's pretty much all I have on my end, and I'm going to throw it back to Jeff. And again, if there's any questions, let me just see if there's any questions here. 1 second. One second, and so I can answer them. 1 second, let me make this bigger. Sorry. What is the advantage of a 21 bar over any other moving average? Well, there is no advantage. There's no magic on any. If it's 21, if it's 15, if it's 50 or 17, it all has to match your personality. Because again, the only way it's gonna work is if that you can follow this. And that's what I try to do, is help you develop a plan and trying to prove to you that simple stuff works. You don't have to find this holy grail indicator because it doesn't exist. Let's see if there's any other things. When you partially exit or add to positions, again, it's a personal question. Let's say you're up 50%, who knows? 20%. You could take some profits. It's all up to your plan. But your plan needs to be written and followed. You don't just like put your thumb up in the air and say, I feel this or I feel that. It needs to be thought out. Because if you take profits, you know what's going to happen? One is, and there's no one, it's a double-edged sword, because on one time, it's going to be that you were able to book profits, and then the other time you can beat yourself over the head because it keeps on running up. And you have to be able to accept that. And a lot of times people do not accept that. So there is no part, to do this or to do that. It all depends on your plan and when to add. When you look to add, I look for specific reasons to add. And I'm only adding small percentages. Let's say, again, 20% of my portfolio might be into XYZ stock. Okay, great. I've made my allocation. Let's say it's 100,000 and I have 20,000 into it and I get a 3-week tight breakout. I'll add 10% more. And then if I get another one, I'll add another 10%. Or if I get a retracement trade, I'll add a 10%, because like I showed you with CMG or Chipolita, you don't know how much these things can run. They will defy logic. There'll be moves that, like Tesla, that you step back and you go, I can't believe this happened. Let me see what else I have here. Okay, version, we did it. See if there's any other questions. Okay. I'm going to throw this back to Jeff unless there's any other questions. And then I'll also, this is my details. Andrew at Trend Following Mentor. The best is not to call me because I don't answer the phone during trading hours. I answer emails. I get right back to people. And my goal is to try to help you. So I'm going to throw this back to Jeff. Jeff, are you there?
Where would I go? All right. Good session today, Andrea.